The iShares U.S. Home Construction ETF hitting a record after two new sets of housing data points were released. The Case-Shiller 20-City Home Price Index for April showed a 1.7% dip in prices year over year. But month over month, they were up 1.7%. And then new home sales soared unexpectedly to the highest in 15 months, even as mortgage rates continue to hover around 7%. Jeff Taylor, the founder and managing director of mortgage solutions company Mphasis Digital Risk, joins me in a Fox Business exclusive. It's going to talk to you again. And I think in particular, let's zero in on Case-Shiller. Start there. You are in Florida once again, as several Florida cities making that list. And these are substantial increases on a percentage basis for home prices, existing homes. What slowdown, I guess, Jeff, is the question.
Cheryl, thank you so much for having me again. It's always great to speak with you. Look, when you look at Florida, like you said, it is not slowing down at all. The entire state, but especially areas like Miami, continue to see growth. But there's more than just housing that plays into this. I think at the underlying, one of the big points is also taxes. You look at states like Florida and Texas, and because we don't have state income tax, that has continued to attract people here. Obviously, being able to work remote is a big thing. It's a little bit less than it was a year ago. So the fundamental driver for housing is incredibly strong. And since we still have supply issues, Florida I see as a state that's going to be it's going to continue to grow and be very stable through the rest of the year, where a year ago I would have thought maybe you could have seen a 5 or 10% decline in different pockets of Florida.
And that was, well, the prediction was we were going to see 25% declines in places like Austin, Texas, and Phoenix, Arizona, and we have not seen that. Existing home sales, I want to stay with that, and that's why I led you with Case-Shiller, because, you know, that's 86% of the market is existing home sales, but there's a supply problem going on because a lot of these homeowners, they're sitting on 3.5% mortgages. They don't want to sell if they're going to have to go into a 7% mortgage. It's almost like the market is still stuck. Is that changing in real time right now?
I think it is because, look, as the Fed just signals, most likely, although they have reserved the right to potentially change it, we may not see any more interest rates. So we're at about a 6.875 30-year fixed right now. So if you're looking at the market right now and you're saying, okay, over the next 6 to 12 months, rates may come down, that's going to get existing home sellers potentially more thoughtful about potentially selling their houses, and then the demand has not slowed down over the last 24 months. So you could see more. You could see a lot more people in the game for home buying in the next 6 months as rates may come down. Now, if you're going to get in the game, get smart, get ahead. There's a couple things you need to do. Get qualified, okay? Get qualified. When you get pre-approved, for 90 days, that pre-approval will stand. So if you're even thinking about it, get pre-approved and go ahead and start to look at it, because chances are we are at the top of the mortgage rate cycle. Okay, so as opportunities come down, you want to be pre-approved to be able to read to buy, and then if you're going to sell, you're waiting. You have that number, like you said, you have a 3.5% coupon. How much money do you have to clear off that house to be able to pay a higher coupon rate, even if it's at 5.5%, to move to where you want to? So people are being opportunistic and try to close those gaps and get deals done.
We're showing video of new home construction, and that was my next point here, because if you look at new home sales, that jump, that was we're not at a 15-month high for new home sales. And we knew that there was a supply issue on the new home sales side as well. But what's interesting is that we're finding out now that these builders, 25% of the builders reduced their prices in June, and 56% of new home builders offered credits. So is that where the consumer is going to get a better story, is on a new home?
So, Cheryl, but that sounds like it right now. In the last data point, consumer builder confidence has risen 6 months in a row. So the question becomes, how long are they going to offer reduction in prices in credits, right? So that has been what they're doing, but I wouldn't be surprised if we're talking in a month or two and all of a sudden we have, less than 5% of reduced prices and less than 10% of credits. So if you're looking right now, I think the new home sales are sort of at that top right now, and you can probably get a good deal. But again, it comes back to, as a buyer, get prepared, get yourself to get into the game, even if you don't know you want to buy right now, because I think that we're at that inflection point where the market is about to shift, and it's going to become much more of a seller's market than it has been.
Even in Miami, you think that's true, or Florida?
You know, it's funny. So I've lived here my entire life. Miami seems to be an anomaly. I often, for decades, thought that Miami lagged behind some of the other big cities like New York and San Francisco and Chicago. I think what's different in Miami, why I don't think it necessarily lags behind, is what happened post-COVID. It wasn't just the interest rates, and it wasn't just the move down to Florida, but it's the amount of businesses, whether it be private equity or real estate firms, that actually moved in here. And all of a sudden, sort of that perception that you could work in Miami just as well as New York, I think has become a reality. So I think Miami will remain hot to stable. That's definitely more than other big cities in the country.
Citadel left Chicago and hoofed it down to Florida. Real quick before I let you go, Barbara Corcoran said that she was on the show with Liz. She thinks that rates, when they come down, that's going to lead to less inventory. Is that true?
Well, I do think that makes a lot of sense, right? Because as rates start to come down, then people are going to be like, okay, this is my time to get back in if they're looking to buy. And also from a seller perspective, if they're saying, okay, rates are coming back down, if I can sell here, I can now get a mortgage a little bit less than I was looking at 5-6 months ago. And if I've cleared enough on the house I sold, maybe I can make that come to fruition and get the new house. So I do believe things will pick up as rates come down, because that will also generate confidence that we've sort of seen the top end of the mortgage rates market. And
that's going to be more competition if you're a buyer. Jeff Taylor, it's good to see you again. Thanks for being here.
Thank you, Cheryl.
All right. There's no place like home, sweet home, everybody, right here on Fox Business. We're helping home buyers find their American dream home. Check out the latest episodes. They are all streaming right now, all 3 seasons on Fox Nation.